Welcome back. So YieldMax looking to cover CONY and NVDY today as far as what their week ahead looks like, where their positions are structured for the funds, what strike prices they have sold, where their synthetics are positioned for the week ahead. So they're looking to dive into that. Before we get started, just a YieldMax summary update for all the distributions announced for the month, I guess not the full month, but the months to tell now, or the previous 4 groups for the underlying equities. Here's the distribution for how we're doing in terms of what the distribution has been divided by the current or recent, I should say, ETF price and what funds have been paying the best. Top 5, Morrow came in first at over 10%. Then you had Hood, which has been a phenomenal fund thus far, followed by Murney, SMCY, and NVDY and Misty. So those round out your top 6. CONY coming in at 8, Tesla 9. And then as far as what rounds out the bottom, of course, you have Apple, GDXY, Netflix, GUI, Babo, PayPal. So that's just a quick look for those who are interested in how the funds have been doing near term for what they've been paying. As far as fund sizes, just a quick update. Looks like I have the update as of the 18th. I'll look to get that updated, but it's not too far back. Misty's the largest fund by far, followed by NVDY, CONY, and then the top 5 is Palantir. Everything else is below this average of about $500 million in fund size. And then jumping into what I intend to cover today, that would be the fund structures for NVIDIA as well as CONY. So NVIDIA, Group B pair, recent distribution was just over $1.03, as you can see here. As far as how it's structured for today going forward, here is their positioning makeup. Perhaps I'll put it right there. You can see this appears to be a typo in there. The YieldMax spreadsheet, because they still have for some reason, they still have a 7/18/2025 expiration date on their spreadsheet at the 180 strike. I'm assuming just forgot to delete it, so I'll assume that's 0. But yeah, just one little mistake, which I don't think should be there. But as far as moving forward, I guess we'll ignore that little point right now. The synthetic, they got a 160 and a 165. If you want to see where these lie on the map, you can just click them accordingly. Both are below the current stock price, which when I first got the update, it was 172.8, so may have moved a little bit during the day, but that's where I was at. And as far as where they got their funds, their contracts sold, you can see they got the most sold at the 177.50 strike. And then they got about half as many at the 170, or let's see, the 175 and the 180. So we're going 175 to 180 is where they got sold. And then they also bought insurance. So they did the credit spread approach. They got their credit spreads structured from 182.50 out to 187.50. And the bars you can see here show the relative magnitudes. Not a lot of upside that we have for fund holders to gain until we start getting capped out. But we do got the insurance. So if an NVDA has another big week, we do start capturing upside again once we hit 182.50. As far as the fund makeup is concerned, maybe I'll zoom out just a bit so I can capture the entire thing. There we go. We can see, I'll probably do it on a per share basis just so it makes sense. So the ETF price, just under 17 a share. Of that, you can see we got 17.36 in cash. The synthetic values were 62 cents, and the contracts we sold are just about 10 cents or 9 cents for the week. As far as the synthetic usage, so based on the synthetic, we got just over 110,640 contracts that we got collateral via the synthetic. That means we can sell contracts against this to generate options premium. Accordingly, I showed where those strikes were sold at. As far as how many we sold, 110,640. So we basically used our full collateral to sell options against. And then we bought options, or we did the credit spread to guarantee a 59% kind of insurance. So you can see of the 110,000 that are sold, or I should say 110,640 that are sold, 65,140 contracts are bought. So roughly half the position is insured. So if there's a big move in NVIDIA, the upside's not fully capped. We gain it again. And I believe it was the 182.50 strike price. Just to make sure. Yep, 182.50. You can see, or I guess on this position percent, What this basically shows is just what percentage of the shares that you have sold, at what strike prices they're at. So you can see at the 177.50, you've got 49.85% that are sold. So of the total that we have sold, 49.85% are at the 177.50. 24.85% are at 175, and the rest, or the 25.31%, are at the 180. And then this just shows what percentage of the ones we have sold we have insurance. So of the ones we have sold, we got insurance at 170, 182.50 for 24.85% of what we have sold. And yeah, these three should add up to that 59% that I previously showed on the previous page. Then as far as how the fund's doing, we're getting close to 1 billion or not 1 billion, 2 billion in market cap. Shares outstanding continue to grow. These are some other graphs if you're interested in what not how many contracts are sold, but what the market value is, or what the market value per share is for what is sold. So just looking at this one quickly, market value per share is 4 cents or 4.2 cents for this 175 strike. So assuming that would expire worthless, the fund would go up by 4.2 cents, which would be, this is just on a percentage basis, 0.25% for the fund. But that would just be a weekly total, so just for that strike price. Yeah, I guess that's an update for NVDY, excuse me. Then the final one to, I guess, close out the video is Coinbase. So CONY is a fund. Their distribution will be announced later this week. Their last payment was 53 cents a share. CONY's, the underlying equity, has been on quite a move, so I'd expect maybe a pretty good distribution for this month. They should be able to do it as the fund's gone up. They've collected options premium. They've built their synthetic positions. However they decide to pay out, I guess it'll be interesting to see. But as far as an in-depth look at CONY, we'll start off with positioning. They got their synthetic right now at 390, and the total stock price is, at least last time I pulled it, was just over 420. I think it's a bit higher now. But all their contracts are at the 725 strike date. And here's a look at what they have sold and the magnitudes of each from a contracts perspective. So the most contracts are clearly at the 450 and the 470. Then they got sprinkled in between 440 up to 465 in between there. So they got a lot of different strikes working. And then they got one pretty big insurance hedge at the 475 strike. So once they do pass the capped, they start gaining again, right? So they got the contract sold at 470. If it does have a big move, CONY, I'm talking the underlying equity, beyond 470, you're capped, but then once it hits 475, at least a portion of the fund synthetic starts capturing gains again. And then we got more at 510 and 520. So that did have a pretty big week to get to 520, but this coin was like, 250 not too long ago. So clearly capable based on how the market goes. I just want to look too. So as far as what they're using, you can see they got 34,750 contracts that they have collateral in via their synthetic. So they sold contracts against all those. So they sold out 34,750, but then they bought 14,770 to act as an insurance hedge in case the stock really moves. So I consider their insurance percentage at 43%. On a per share basis, what their fund is looking like, ETF price above 10, it broke the 10 barrier, and they got 962 in cash. That synthetic, as I said, is worth 77 cents. Pretty good when you only consider it's a $10 ETF value. So we got over just about 7% in the synthetic. And we got negative 10 cents, currently a drag on the fund based on the contracts they have sold. As always, I like to note, if the contracts they sold don't hit, this 10 cents will go to zero, thereby push the ETF price up 10 cents. And that's just for this week. So that's what we're looking at as far as how this fund is structured. And I think that is all I have to cover today. As far as how CONY's been doing, once again, market cap, I think this is what the third or fourth biggest fund. I can't remember, I just said it, but they're just under 1.5 billion in size. Shares outstanding have been going down a bit. Not sure if people are closing out some of their CONY after the Coinbase stock itself had a really good run, but share count falling a bit. We'll see how that trend going forward, but thanks for tuning in. We'll see how it goes the rest of the week.